Hello, this is Vincent Randazzo from Lowry Research, here to go through a condensed version of our fourth quarter review and 2017 outlook. We'll examine some of the key market themes, the conditions of stock market supply and demand, as well as what to watch for going forward. For those of you who are unfamiliar with Lowry Research, we were founded in 1938 to provide analysts and investment professionals with an unbiased, factual analysis of the stock market based solely on the law of supply and demand. In our last quarterly presentation's conclusion, we said stocks remain in an old bull market, but bull markets don't die of old age. Broad strength in the more cyclical sectors are the most likely and best demand leaders to further upside. Without weakening in breadth via our key measures and or a sustained uptrend in selling pressure on a rally or sideways move, chances of an intense decline appear limited. A major market top is not foreseeable at this time, but monitoring our indicators remains crucial given the widening negative buying power selling pressure spread. And then finally, bond yields may have bottomed during Q3. A continued resurgence in yields has potential to change the entire investing landscape, along with obvious implications for rate-sensitive stocks. Now let's get into themes of the most recent quarter. With central bank intervention less of a focus, stocks and bonds have continued for the second quarter in a row to decouple, as is more typical for stock bull markets. Pro-cyclical sectors have generally outperformed. Equities decisively broke out an 18-month trading range. Demand strength remained broadly focused as breadth matched price index highs with their own new highs. Both short and long-term demand via the short-term index and Lowry's buying power index moved into assertive uptrends. And then selling pressure fell through the bottom of a year-long trading range, registering an intermediate-term buy signal. This slide illustrates a major shift that took place last quarter via the net spread between Lowry's buying power and selling pressure indexes. Now, buying power is Lowry's proprietary intermediate-term indicator of investor demand, while selling pressure measures intermediate-term supply in the stock market. During the last half of the year, the spread appeared to form a falling wedge pattern, common in traditional technical analysis bottoms, and then had a sharp breakout above its 20-week moving average and out from a long-term downtrend line. The last time this happened, where the spread had been falling for over a year, bottomed, and then reversed, was in 2012, and before that, in 2009. At the same time, the bottom panel shows us why. Demand. The short-term index, which is our measure of short-term demand for stocks, surged to levels not seen in over a year, and it itself broke out from a series of lower highs and lower lows. The short-term index, though not part of buying power selling pressure spread, further reinforces the sharp rise in demand starting in early November. More favorable trends are clear when examining market breadth or measuring how many stocks are participating in an advance or decline. Specifically, Lowry's operating company only segmented advanced decline lines, all of which continue to confirm new highs in the price index. Operating companies only strips away closed-end funds, ADRs, and preferred stocks that trade on the NYSE, which we believe provides a more accurate view of breadth versus the traditional all issues advanced decline line referenced in the media. Then we break out the representative market cap segments. All three market cap segments' advanced decline lines are in solid uptrends, which reflect robust stock market participation of this intermediate term advance. As far as warning posts of possible divergences that we historically see ahead of major market tops, there are none, which means further gains are likely in the foreseeable future on an intermediate term basis, which usually means even if we had a divergence today, we would have at least 4 to 6 months before a major market top would appear to form. The bottom line, evidence based on a variety of Lowry indicators after having improved in the third quarter have more definitively been upgraded during the fourth quarter. The primary trend of the market is assertively positive and well supported. Expansive strength in the majority of sectors, especially the more cyclical sectors, is a further sign of strong, broad-based, demand-driven market advance, and without weakening in breadth via Lowry's key OCO measures and or sustained uptrend and selling pressure on a rally or sideways move, chances of a major market top still appear limited. A continuation of the new uptrend in the buying power selling pressure spread suggests an environment supportive of further longer-term gains. Thank you for your time and attention. We hope that you enjoyed our presentation and encourage you to contact us should you have any questions at info@lowryresearch.com. Please continue to stay tuned to Lowry Research updates by visiting Interactive Brokers Traders Insight as well as through lowryresearch.com.